On the Market Day Report, I'm John Jenkinson, and a real quick reminder that coming up this Friday, we'll have a complete full day of trade for the markets. But the markets will take off a week next week on Monday because of the New Year Day, and then resume on Tuesday. So just keep that in mind as well as we go through the day today. Let's get to the futures real quick here. We start with the corn. That nearby contract is now down a quarter at 351 3/4, and July corn is down a half at 368 1/4. January soybeans up 10 3/4 at 960 1/4. March beans up 11 at 971 1/4. And on to the March Chicago wheat market. We're down 2 pennies now at 422 3/4. The Kansas City March contract is down 2 1/4 at 420. In Minneapolis, March wheat up 1 1/4 still at 613. And that cotton market, well, there are a lot of folks watching this very closely. Down 54 points on the March contract at 77.33. Let's go to the edge of the trading floor in Chicago with the CME Group. We're being joined by Todd Horwitz with Bubba Trading. Todd, I hope you had a good Christmas. Welcome. Kind of a shortened trade week this week. So what's the attitude like and the mood like there on the floor?
Thank God it's a shortened trade week. Good morning, John. There's not much going on, as you can probably hear or not hear in the background. It's going to be quiet. It's going to be, relatively controlled. I mean, you'll see one big order will push the markets one way or the other. And other than that, it's going to be a very much, kind of sit back and watch versus try to get too involved because of the quiet we're going to see in the market here.
One of the things that we've kind of gotten into a pattern of, Todd, and you talked about this in your writings this morning, and we see it today even, where we have a strong start to the day, and then we just kind of drift off toward the afternoon hours, going into the close for the grains anyway.
Yeah, well, I think in the general market, you saw a market that was much weaker, and then it got strong right around the opening. And I would assume it'll drift the rest of the day. And, of course, in the grains, we were slightly higher, and now we're falling a little bit, other than, of course, soybeans. But soybeans are due a bounce under any circumstances. What's really happening here is everybody was so much into selling them last week that they want to buy them back. And, of course, it's very thin, so it's hard to get them back. And that's what you're seeing here, why I think we're up 10 cents. I think if we get back to, that 980 level, it's probably going to be another sell looking to go down to the downside because, again, the lack of activity, the lack of real market action right now, and the lack of anybody really getting involved is going to keep these markets pretty much at bay.
So do we still have the risk of taking this market down to that 930 level then in that range?
Oh, I think that's a real possibility. I think that unless we get an equity market break soon, I think that the soybeans are going to go much lower. I think that they've got some room to do and some work to do on the downside unless something else changes. And I don't see a lot of new money coming into beans right now because I think what you're going to see here is the overall trade. And right now they're just following the technical patterns of the charts. And until we get some real action, it could bring it into play. But we'll see how it plays out from here.
Well, the corn and the wheat market's certainly starting to drift here lower just a little bit, and more than likely, could that put a little bit of a draw on the beans as well throughout the day?
It could, but I don't know how much the relationship is together right now. They take turns being in together and then out of sync, and I think right now we're still pretty much out of sync. I think that corn and wheat are on their lows, and I'm more than happy to buy more and hold on to them, almost like I'm putting money into like a bank account because I believe that they're going to rally. Soybeans, I'm not quite as comfortable holding on to because I believe that there is a great chance that that bottom could be tested or even taken out, and I think that's one of the problems we're going to see. And also, when we start, figuring out what the new marketing plans are going to be for next year, are we going to plant more beans? Is there, there's a whole bunch of things going on depending on what happens around the globe. So I think that's another big issue to worry about.
Todd Horwitz with Bubba Trading here with us at the edge of the trading, a very quiet trading floor, I might add. Todd, when we come back, we'll get into the livestock, the VIX, gold, and some of the outside markets as well. That's straight ahead here on the Market Day Report. Don't go anywhere. Todd Horwitz with Bubba Trading is there at the edge of the trading floor. And Todd, I want to get your thoughts here on this livestock market. It really did start out with a little bit of strength here so far this morning. But again, here we go with another very light trade, a very kind of a shortened trade week.
You know, I think that it didn't really catch me off guard, as you know, because I wrote over the weekend what I thought about cattle, and even though the report was somewhat bearish, and it was certainly more bearish than it was expected, but of course I believe that it was already priced in, and I think that's what we're seeing, evidence of the fact that it was already priced into the markets. And I think, you know, we're at the bottoms or very near lows, certainly in the fat cattle. In the feeders, you know, we could still have a little bit of room, but again, I'm looking for an area to buy. I'm no longer interested in being a seller. We met all the downside objectives that I had, so I'm looking for spots to buy. I was hoping that we're going to give them a little bit of a flush today that I could step in, but of course, the better plans of mice and men, right? They actually opened them a little bit higher. So I think that look for a spot to buy. I think we're going higher into the new year.
All right. What about the hog side of that trade then, as you looked over those reports, and what we're seeing here this morning so far?
Well, hogs, I assume you had a little bit of a bearish bias, but you saw the action. You know, the one nice thing about the hog market is they gave you at least an hour to trade at the end of Friday, so you could kind of resolve what was going on, and they ran up like $1.50. This morning, when last I looked, they were a touch higher. I think you're probably looking right now on a pretty good range-bound trade, 66 to 72. So if they get back up towards 72, I'd probably look at selling them for a little bit, and then look to be a rebuyer back around 66 in February. I think that's where we are right now. It showed us very good action, and I am naturally longer-term bullish in hogs as well, but I'm not real thrilled that they're right here right now because I wanted to buy them cheaper.
Sure. Let's talk about the crude oil, some of these outside markets. Crude oil's higher this morning. The dollar's a little bit stronger. Where's the VIX index so far?
The VIX is a little bit higher. I think one of the things you got to look at crude, though, John, is the backwardation that we're seeing in crude. Now, I don't know what happened as I was walking up the stairs to come here, but the crude exploded and went up about 50 or 60 more cents as I was walking up. And I don't know if there was some news item, but there's some fear going on. I think it's probably in the Mideast right now that has February crude higher priced than May crude. So that's always a sign saying that this is a very temporary rally, and it looked to be a seller at some point. And again, I'm not saying to step in right here, but certainly somewhere around here, I'd look to be a seller of crude because this is more being built from fear, and we should have no fear about the Mideast because we've got a 200-year supply here in the United States of America, so we don't have to worry about what goes on in the Mideast necessarily.
That's a good point. What about the dollar? Now that we've got that news with the Fed kind of behind us, we've got the tax plan is now in place. The only next thing to really watch here, I think, is just where the consumer decides to place his money.
Well, I think the dollar is going a lot higher for a lot of reasons, but number one would be that if the tax plan is going to work, and again, I'm not thrilled with the way they did the plan. I thought that President Trump settled a little bit because he wanted to get a victory, but it's going to be better. It's going to make the dollar stronger. It's going to allow rates to go up faster than the Fed wants them to go up, and if rates go up, the dollar is going up, and I think that the dollar is going back to par, which is $1, and I think that is the end of the day, and I certainly would think that we're in this 93 to 94 range, and I think we break to the upside the next time we break out. And I think, again, we're not going to get there tomorrow, but I think over the next year, we're probably going to get back to par. But I don't know that it'll have as much of an effect as it used to have on the overall commodity complex because I don't think the dollar is as important because everybody kind of realizes the manipulation that goes on with it anyway. So it's just kind of a game right now. Okay.
Todd Horwitz with Bubba Trading. Todd, thank you very much. Always good to talk to you. Let's go to the live cattle market right now and find out where this market is headed here part way through the session. February right now up 70 at 119.28. April up 64 at 119.92. January feeders up 80 at 142.35. March feeder cattle 139.20. That's up 65. For the lean hogs, it's February up 52 at 70.50. And Todd talked about this kind of being a sideways trade. April lean hogs down 13 at 74.65, and May hogs up 13 at 79.88. And for that crude oil market, as we were talking about there just a moment ago with Todd, February crude oil up 90 cents now at 59.37, but off of its high of 59.55.
Interesting the way the trade is reacting after all the livestock reports that came out last week. You know,
absolutely
very thin volume today, and going the opposite of what the report would have seemed to have indicated when they had high placements numbers. So
exactly,
yeah, that's why we're here with live quotes.